Welcome to the Coin Stories podcast, where we talk about investing, hard money, Bitcoin, and how technology is revolutionizing the global economy. I'm Natalie Brunell, and I'm here to learn with you. So this is for educational and entertainment purposes only. None of the discussions should constitute as official investment advice, and you should always do your own research. This show is made possible through partnerships with companies I trust, and I'm very picky about who I partner with. So I hope you take the time to listen to the ad reads throughout the show. First up, Swan. I partnered with Swan because it is a Bitcoin-only company that is focused on helping people save for their future and self-custody their Bitcoin. Swan can help you start a direct deposit to take advantage of Bitcoin as a savings technology and learn how to take it off the exchange. Swan's mission is to educate 10 million future Bitcoiners through free resources and media projects like the Hard Money Show. Swan also offers retirement planning with an IRA, tax loss harvesting, and a white glove private client service. I use Swan to dollar cost average, and I deposit a little bit every day that's equivalent to what I might spend on a meal so that I add to my future nest egg and lower my yearly cost basis. Swan Studios produces my hard money news reports, simplifying Bitcoin for mass audiences and documenting Bitcoin adoption around the world. To learn more and get $10 in free Bitcoin, head to swanbitcoin.com/Natalie Brunell. All right, next up, Bitcoin Conference 2024. The world's largest Bitcoin event is headed to Nashville next year. Early bird tickets are now available, and this is the lowest cost you'll be able to secure for the conference all year. And if you use the code HODL, HODL, you'll get an extra 10% off. So come join us for 3 great days of networking events, panels, keynotes, workshops, and more. You never know what big name might be announced when tickets are much, much higher in price. Head to b.tc/conference and use the code HODL. I'll see you there. Hi, everybody. All right, by now you probably know that the SEC is suing Binance and Coinbase for breaking U.S. securities laws. Not a lot of people are surprised, especially not Lead Analyst at Swan, Sam Callahan. Sam, thanks so much for joining me and breaking this down.
Yeah, thanks for having me, Natalie. Certainly a busy week. We had 2 of the largest cryptocurrency exchanges get sued back to back. And so it's been a really wild week. So happy to be here.
That's right. Okay, let's start with Binance because you've read both of these lawsuits. The first complaint, 126 pages. And I know that you did an investigation on Binance just a couple of months ago, warning about some of the things that they've been doing. And so I know that you weren't surprised with some of the revelations in the complaint. What can you tell us?
Yeah, I wasn't really surprised at all. I mean, anybody who's been following this space knows that Binance has been raising eyebrows really since it came on the scene since 2017. With its questionable business practices, really. Everything from how they raise money through their ICO, the certain tokenomics associated with that token, the BNB token, how they listed tokens on their platforms, the jurisdictional arbitrage, where they held their headquarters was very secretive, and they tried to kind of avoid regulators by being secretive around that. So all those things combined just raised a lot of eyebrows. And some of the revelations that occurred in the SEC complaint were pretty shocking even for me. So we can kind of get into more detail there. But yeah, I'm not very surprised at all.
Okay, well, tell us some of the biggest takeaways. When you read that complaint, what really stood out to you?
Well, what stood out to me was the charges. They got the 13 charges levied against them by the SEC. And I think some of the charges were expected. One was being an unregistered exchange, broker, and clearinghouse in the United States. They're not registered or followed any kind of regulatory requirements in the United States, and yet they still service United States customers on their platforms. And so that wasn't surprising. What also wasn't surprising was they got charged with issuing an unregistered security with their BNB token. If you looked at the BNB token, it really fit every prong of the Howey test. And the Howey test is just that old law of how people determine what is and what isn't a security. Is there an investment of money? Is it in a common enterprise? Is there an expectation of profit? And is it derived from the efforts of others? So Binance raised money through an ICO. They issued their BNB token, and it was open to the public. So there was an investment of money made. There was an expectation of profit because Binance itself built in certain mechanisms into the token that made the token's price go up in value. And so it was derived from the efforts of others, the company Binance. So they even took 20% of their profits every single quarter. They bought BNB with it, and then they burned that BNB. So they reduced the supply of the BNB token to pump the price every single quarter. So that's perfectly fits the Howey test. And to me, it was the most egregious example out of all the cryptocurrencies of one that fit the definition of a security. So that wasn't surprising at all either. What was surprising was they were charged with misleading investors due to lack of controls and surveillance and performing market manipulation on their platform through trading firms that were owned and controlled by the Binance CEO, CZ. That is a really serious allegation. And these are nefarious activities where they took customer funds, commingled them without their knowledge, and then traded on the platform without their knowledge as well, oftentimes against them. So those are really shocking revelations and a lot more serious than, say, the Coinbase charges that we'll certainly get into as well.
How difficult is it for regulators to go after them when they're so largely offshore? I mean, are they just going after Binance US? Because I also understand that somewhere in that complaint, the CCO, I believe it was quoted to say that they know that they were operating an unregulated securities exchange.
Yeah, well, you got to go into like Binance's history of how they started. Initially, they just serviced all US customers. It was really easy to access Binance, even in the United States. I mean, I had a Binance account in 2017. It was really easy just to sign up and get on. And so a lot of their business kind of exploded by servicing the United States without registering with the regulators in there. But come 2019, they got under regulatory pressure, and then they opened up Binance US, and they kind of separated the company, or so they said, through Binance US, and then they had the Binance.com, which was the international exchange. But in reality, what we're finding out is there wasn't really any separation at all. CZ controlled both entities. No matter they hired new CEOs for the Binance US companies, CZ still had total control over what occurred in that entity, and the funds were kind of commingled between the entities. And then they also didn't really stop US customers from accessing Binance.com. And so they kind of did this thing in 2019 where they said, okay, we'll comply with US regulators. We'll open up a separate company. We'll kick US customers off Binance.com. We'll start to comply. But really, they didn't do any of that. And so these charges are really against Binance as a whole, because there really is only one company. Almost like it's a sham to say that there's two separate companies. That was kind of their play that's been exposed in this complaint.
Okay, so Binance was issuing the BNB token. They also had a stable coin, which I know the SEC already went after prior to this. It was issued by Paxos. But how similar or different is this from FTX, which also had its own native token, FTT, that they pumped and traded against their customers?
Well, I actually wrote about this. I actually wrote about like the similarities between Binance and FTX. They're not the exact same by any means, but it's really easy to look at the similarities because, they had their own token that they issued. They have no board of directors. They have a lack of minimal corporate governance. They had market makers trading on the firms themselves that they owned and controlled. And then they were offshore and they're unregulated. And so Binance and FTX, the similarities are pretty striking. Just when you look at how the companies are set up, the lack of oversight, and the fact that really there's a ton of secrecy, not only how they operate from those looking in, but also for those who actually work for the company. You'll find that just like in FTX, CZ seems to control everything. And so there's a lot of similarities between the two. And right now, I think this complaint, all I was reading, I just had echoes of FTX in my mind as I read that complaint.
Can you tell me a little bit more about these market making firms that the SEC alleges were conducting, manipulative trades?
Yeah, so that was a big bombshell to me in the SEC complaint. Basically, there was two market making firms that were owned and controlled by Binance CEO CZ. There was one called Sigma Chain that was out of Switzerland, and then there was one called Merit Peak, which was out of the Cayman Islands. And there was two things that were interesting with them. One is that it was shown that they would divert customer funds and commingle them at these firms without the customer's knowledge. And so that's one of the reasons why the SEC says that they misled them. And the other thing is that they actively traded on the platform, and they didn't have any kind of surveillance or internal controls over how they traded. And so, and the SEC claims that they did wash trading. And wash trading is when a firm would just, or anybody would just buy and sell right away without any kind of real economic activity there. But it's just to pump the volumes, and it's just to make it seem like there's more buyers behind an asset. And the interesting part was that they found that the Sigma chain would perform a significant amount of wash trading. And again, this was a firm controlled and owned by CZ. And when they did the wash trading, when Sigma chain did the wash trading, it was like around when Binance US got launched. And so they wanted to act like it was a real big success. So they would pump it up. When any kind of new token got launched, they would pump up those tokens. So there was evidence of 65 of those cryptocurrencies. Once they got listed, Sigma chain would come in and do wash trading and pump up the volumes. And then also when they were trying to raise money, they would pump up their trading volumes to make it look good. And there had been multiple allegations of market manipulation throughout the years of Binance, but nothing really came from it. And I think one of the really interesting things that happened was when Binance acquired CoinMarketCap, which is the number one data aggregator of trading volumes across the industries. And when they did that, really what you got to understand, everybody goes on there and just looks at CoinMarketCap to look at the trading volumes. So it's like, if you're faking the trading volumes with your own market making firms on your platform, why not buy the data aggregator, and you can just manipulate the numbers there and just protect yourself. And so that's what they did. They paid $400 million and bought CoinMarketCap. And in one of the replies, and I wrote this in my piece, is Hong Feng, who's the CEO of OKCoin. And she's one of the main exchange rivals, I guess you could say, of Binance. And in the replies of like some Block article that's announcing the acquisition of CoinMarketCap, she says, "Beware those who try to control the information." And it had like 2 likes, but she kind of saw what was going on here, I think. And when you had all this wash trading that happened, it's like, what's actually real? And so you had these market making firms trading on the platform without the customers knowing it. And who knows, like, if they were using customer funds, like, we don't know how they're actually funding themselves or what their purpose was. But we know that there's financial conflicts of interest when CZ owns the firms themselves. And so just one more point was looking at the CEOs of Binance US. And there was really like 2 main ones, I guess. One was Catherine Colley. And Catherine Colley saw an interesting transaction of hundreds of millions of dollars go to Merit Peak. And she was like, what is this? Like, why are customer funds going to Merit Peak? And she never got an answer. She went to a finance executive at Binance. She's like, what's going on here? And then she shortly resigned afterwards. She was never heard from again. In the complaint, there's BAM CEO A, and I'm just guessing that's her. And then BAM CEO B, I'm guessing, is Brian Brooks, who came in after her. He's the former head of the OCC. He came on to Binance US as the CEO, and he lasted 3 months. He went in there, took a look around, and he just left. And I think that was just such a red flag. And BAM Trading CEO B in the complaint talks about these trading firms and how, like, he didn't understand what they were doing, and there wasn't any kind of controls or surveillance around them. And then he said in the complaint, and again, I don't know if this is Brian Brooks, but I'm just making assumptions here. But he goes, I came in there and I realized I wasn't actually the CEO of Binance US. CZ was the CEO. I had no control over actually what was going on there. Once I found out that I didn't have control, I left. And so all of this just shows that this is like really nefarious activity going on with conflicts of interest, with CZ owning not only the exchange, but the trading firms trading on the exchange, often against the users. And that's kind of what they're alleging in this SEC complaint.
So how is this going to play out? Because once these sort of lawsuits get filed, I mean, this could drag out for years and years, right?
Yeah, this is going to be a really drawn out process. I mean, the thing about Binance and Coinbase, for that matter, is they made a lot of money, and they have a lot of legal resources at hand to fight these charges. Just look at the Ripple case. I mean, it's been going on for years and years against the SEC, and now we're talking about the number one and number two largest cryptocurrency exchanges in the world. They're going to fight these charges tooth and nail. And so I expect this to go on for years and years and years.
Well, one thing that can be said for Coinbase is they didn't have a token. However, they did IPO. You could have invested in Coin, the security. So tell me a little bit about maybe what stood out in that complaint, which was just filed today.
Yeah, Coinbase's complaint is really around being an unregistered exchange broker and custodian, or clearinghouse, excuse me. And then as well as their staking as a service program with some of these proof of stake tokens, where they would take five of these specific coins, stake them on behalf of the investors, and then they would reward them with a reward and then take a little commission on the side. And that has been deemed a security by the SEC, but it hasn't been registered. So they were offering unregistered securities through their staking as a service program. And as well as they didn't register appropriately as a securities exchange, broker, and clearinghouse. So not as much nefarious activities like Binance, but the SEC came after them nonetheless.
Well, like we mentioned earlier, a lot of people weren't surprised. They did receive the Wells notice. And you know what? Both you and I, we tweeted today that if you pull the S1 filing where they indicated the risk factors when they were IPOing and they were filing with the SEC, they did say, hey, if any of our activities are deemed that we are selling, unregistered securities, you could suffer financial loss. And that seems to be what's happening. So do you think it's a little bit disingenuous for them to be fighting when they sort of knew that this was the business model that they've set up?
They certainly knew the risks that they were taking when they listed these tokens, certainly in my opinion. They say that they went to the SEC 30 times to try to speak with them, and they weren't approachable. So the Coinbase is acting like a victim right now, but that S1 filing really states that they knew the risk involved, the regulatory risk with listing these tokens that may or may not have been unregistered securities. And they chose to do it anyway for revenues, to increase revenues. And so in the S1 filing, really, the SEC actually responded to that S1 filing that talked about the risk factors that you're mentioning right now. And the SEC responded and said, look, we did provide some guidance, and they talk about this publication where they talk about the existing rules of the law. And they said, you do your scoring system, but that's not the same as the law. And so I want you to change this language in your S1 report. And so they also talk about how only Bitcoin and Ethereum have ever been considered a commodity by any regulator in any way. And so it's not correct for you to say that other cryptocurrencies were. So the SEC made them change that language as well. And so they basically said that, hey, you can't do your scoring system to decide what you list and what you don't list. That doesn't sit right with us. You have to follow the rules of the law. But Coinbase did it anyway, and they knew the risks that were associated with it.
Well, I heard you talking on a Spaces. I think you might have been referring to this scoring system. It was a rating council. Can you talk a little bit more about that? How were they even judging what was and what wasn't a security in order to list the token? And they would rate it on a scale of 1 to 5, I understand. And even if it was a 5, meaning it was probably a security, they still listed it?
Yeah. So basically they wanted some clarity over what and what wasn't a security. And Coinbase's view was that the Howey test is outdated. And they need to take more facts in when it looks at these new digital assets to determine whether they are or aren't a security. And so they got together with other major exchanges and institutions in the space, and they formed the Crypto Rating Council, where they tried to create a framework, basically a scoring framework for certain projects or tokens to decide what is and what isn't a security before they listed it on their platform. And I think it was a form of self-regulation. They wanted to say, hey, look at us, we're being proactive. In reality, there's conflicts of interest there because if you're the one scoring it and you are incentivized to list those tokens because you get listing fees for doing so, as well as you get increased trading revenues because, the more cryptocurrencies that you list, the more trading volumes, the more excitement you can have on your platform. You can list the hottest thing. It just creates conflicts of interest, and you're not following the standard rules of the law. You're just kind of following your own scoring system that you created with other exchanges and other institutions in the space. And so that was the Crypto Rating Council. And so, like you said, if it was a 1, they would deem it, it's not really a security at all. If it was a 5, it would be considered a security. And in the SEC's complaint against Coinbase, they say, hey, you rated things kind of high. I don't know if it was a 5 exactly, but hey, you rated things high and you still listed them on your platform with your own scoring model that we said wasn't good enough from the get-go. And so that's where kind of the criticism comes from the SEC on Coinbase when it comes to their listing practices.
Well, Coinbase has listed, hundreds, if not thousands of different tokens and cryptocurrencies. I believe just about a dozen were named in both of these lawsuits. Why aren't we seeing more tokens? Why are they singling out a small group of them?
To me, it's a matter of resources, probably. The interesting part of that complaint was they really dug in deep into the ones they did list about why they were considered securities. And it talks about how the funds were issued, the founding teams, how they were centralized, how they had outsized control over the token price, how they used marketing tactics to pump the price, even false marketing practices, because they would say that they're decentralized when in fact they weren't. And so they were kind of really digging deep and finding details about why that was the case for each and every one of these cryptocurrencies. Now, Coinbase has over 150 of these things listed. So I think it's just a matter of man hours and resources that the SEC probably can't go after all of them at once.
It's time for a quick break to hear these messages from my partners. First up, how would you like to earn 100,000 Satoshis? Well, here is your chance. Fold is the best Bitcoin rewards debit card and shopping app in the world. You can earn Bitcoin on everything you purchase, from Amazon to groceries to your Bitcoin conference tickets, with Fold's Bitcoin cashback debit card. And you can win free Satoshis every day, or even play for a whole Bitcoin by spinning the rewards wheel. You can also buy Bitcoin and stack sats directly on Fold and earn even more incentives and rewards. This is a great app to get someone totally new into Bitcoin, and way better than earning airline miles or hotel points. Head to foldapp.com/Natalie, and if you use my link, you'll get 100,000 sats when you sign up for Spin or Spin Plus and spend at least $20 on the card. Well, that's the incentive of this business model, right? It is enticing customers and making money off of trading fees, which if you're a Bitcoin only company, it's a lot harder to make some of the profits that we've seen some of these massive exchanges make.
Mm-hmm. No, hands down. But I think Bitcoin only exchanges just took kind of the long-term view and the kind of the more ethical view, to be honest with you. A lot of the narratives coming from Bitcoin only proponents or Bitcoin only businesses were that these were unregistered securities and they had a lot of risk associated with them. So we chose not to offer that to our clients out of kind of for our morals, as well as because we thought it was illegal, quite frankly.
So let me ask you about the argument that some of these exchanges are making, saying, we've been asking for a framework. We've been trying to comply. The SEC has had, closed doors. What do you say to that? And on the back end of that, playing devil's advocate, this is securities laws date back to the 1930s. Should there be an update to these when this technology didn't even exist back then?
I had to say certainly. Like, I think maybe they do need a revamp to kind of fit the digital age that we live in nowadays. And I think there is an argument to be made from that side about the lack of communication between regulators, the regulation by enforcement, where these companies were trying to act in good faith, let's say, and they didn't get any regulatory clarity. But, I would say that they chose to do that risk because it was very well known that there was a gray area there. And it could go poorly for them if the regulators did come down on them. But at the same time, you look at other countries and what they're doing, that they're putting together a more of a framework and having communication with the industry. And you would like to see that more in America instead of this enforcement by action where you don't know if you're doing something wrong and then suddenly the hammer comes down on you. It could impede innovation throughout the ecosystem. But again, these rules were in place, and these exchanges took the risks knowing that this could happen. But I think we do deserve some more clarity, some regulatory clarity, and I hope we get that. I think we are getting that, to be honest with you. I think they are doing it. It's just probably not in a way that people would like it to go, like in terms of the enforcement.
I want to read a quote from Joe Consorti and Nick Bhatia's newsletter because I thought it was really compelling. Given that the crypto ecosystem is a hodgepodge of unlicensed financial instruments and opaque protocols masquerading as the future of finance that exists solely because of 14 plus years of zero interest rate policy, we're just surprised it took this long for formal legal action. Nevertheless, here we are now. Now that money is no longer free, Gary Gensler is striking while the iron is hot, seeking to correct a years-long error in allowing rampant financial crime to take place. It's hunting season. I want to get your reaction to that because you follow the macro side so closely. Why is now such a good time for the SEC to go after some of these companies, or is this just the FTX situation gave them a little bit of an incentive? Why now, when the Fed has turned to this aggressive stance? Is this a better time to go after these companies?
Yeah, I think it's certainly a better time for the SEC and these regulators to go after these companies because after FTX, after the bear market, a lot of these cryptocurrencies have dropped significantly in price. Retail investors have lost money and lost their savings. And so when it's really going up and it's the bull market and everyone's happy and these regulators come down, they look like the enemy. They look like the bad guy. But when everything's down and there's been these big Ponzi schemes blowing up like FTX, Celsius, Luna, they come in and look like the hero. And so I think it's more of like a political, benefit for them to do it now. But I do agree with their take. Like, I think a lot of this excess that we've seen in the broader cryptocurrency industry, you can go back to the Federal Reserve and their ultra low interest rate policies that enabled it. I mean, all these VCs basically had free money and nowhere to go. And they found a way to just be able to raise money instantly, flip it on a dime once it listed on one of these exchanges, and made a killing with these cryptocurrencies that basically had no real value. They didn't really have to deliver a product. The product was the token itself, and they were able to just list it on an exchange. But now that interest rates are rising, you really start to see, the water go out and find out who's naked. And so I do agree with their take there, but I think that the timing of this with the SEC, it's more of political in nature and how it makes them look good.
Well, these laws should not be politicized. And there have been concerns raised that SEC Chair Gary Gensler has a strong relationship with the likes of, Elizabeth Warren, who's very anti-crypto, anti-Bitcoin, maybe positioning himself. And I'm kind of curious if you had any thoughts, because I saw him go on, I believe it was CNBC, saying that we already have digital currencies. They're the US dollar and they are the euro and the yen. And it seems like he might be shifting his stance a little bit. Before, he was always very pro Bitcoin. He has a lecture series I watched on MIT. He's clearly very educated on how this technology works. It seemed like he was always a friend to Bitcoin, maybe a foe to crypto. But do you see that changing? Is politics getting involved now? And are you worried?
Well, it certainly could be the case because there's a ton of rumors out there, and I've heard them where, he really wants to be the Treasury Secretary. So maybe he's kind of cozying up to those narratives and to those politicians to kind of get on their good side. And maybe he's kind of selling his soul to get that. Even if he does like Bitcoin, he's like, hey, we have digital currencies. The other kind of viewpoint could be that, he's kind of separating Bitcoin from these technical, like the definition of currency. Maybe he just views it as a store of value. But, you can't really know. Maybe I'm giving him too much of the benefit of the doubt there. But certainly this could be more of a political move by him to start to side more with, the CBDCs the digital currencies outside of Bitcoin for his own political advantages.
I'm like you. I'm going to give him the benefit of the doubt. Maybe he's perhaps a Trojan horse that can finally get some of the White House administration and all of them that were anti-Bitcoin to turn around. But okay, so let's talk about the big picture here. Two major lawsuits. Bitcoin's price rather resilient. I know that's something that you mentioned on Twitter today. What's the big takeaway for someone, whether they're invested in the space or not?
Well, I think the first thing is that, you had two major cryptocurrency exchanges basically get sued back-to-back days. And I think the initial news can be shocking and lead to uncertainty, a lot of fear in the market, and more volatility. But the market absorbs that. And the fact of the matter is these lawsuits are going to be going on for a long time. And it was really impressive to see Bitcoin's price just bounce kind of off 25, and now it's rallying as I speak. But I think a lot of people kind of saw these things coming. It's like I said, Binance has been raising eyebrows since 2017. I mean, all these things we've been kind of talking about for a long time. And it's like the SEC finally figured it out or finally caught up. And same thing with Coinbase. They got served a Wells notice, like you said. And so I think the market kind of expected this. The fact that they both came within days of each other was maybe a little shocking for the market. But the fact that Bitcoin is holding up, I think, speaks to its resilience right now. And maybe there's some seller exhaustion out there just after this long, drawn-out bear market. So to me, it's kind of a bullish signal, to be honest with you. And then Bitcoin itself, I mean, Bitcoin, you're never going to see Bitcoin in one of these complaints because Bitcoin's different than these other cryptocurrencies. I mean,
That's right.
It's leaderless, it's decentralized, it doesn't have a founding team, it doesn't have these regulatory risks. So perhaps we're seeing some capital flow out of these cryptocurrencies that do have regulatory risk and into the king, into Bitcoin, which also would be a bullish dynamic occurring right now. So to me, the price is kind of holding up, and this is kind of back to back. You could say they're black swans, but they're not black swans because people saw them come in, but it's holding up. So I think it's pretty bullish.
Yeah, no, I agree with you. I think everything is good for Bitcoin, and in the long run, this will all benefit Bitcoin and making sure that people can differentiate between Bitcoin and crypto. I was actually hoping for the price to go a little lower. I was hoping for maybe a low 20 so I can purchase a little bit more. But okay, while I still have you, before we go, I want to touch a little bit more on macro because I know you've been following the market conditions really closely. It's a lot of craziness. I mean, Bitcoin has been sort of a stable coin in the high 20s. Meanwhile, we see some of the tech stocks just ripping, new all-time high for Apple, and I'm just a little confused, I guess. I mean, I feel like we're decelerating, continuing to decelerate in terms of the greater economy. We haven't, hit that hard landing. We're not in an official recession yet. I mean, what are you seeing from your vantage point?
Yeah, it seems like markets in terms of equities and other risk assets have been pretty optimistic, obviously, to start 2023. I think that's on the back of a lot of things. I think you've had earnings come out and actually be more optimistic. I think over almost 80% of S&P 500 reporting companies beat earning estimates in Q1. And a lot of people back then, they were expecting the recession to start in first couple months of 2023. That was a common consensus. And now you're kind of seeing a lot of different things happen. You had liquidity dynamics kind of help buoy risk assets to start the year as well. Obviously, you had the debt ceiling dilemma that got resolved. So I think that could seem as a bullish event. Now, there might be some liquidity dynamics after that that could kind of suck liquidity out of the system, but there's also other avenues where that might not happen. And so I think that was overall kind of an optimistic conclusion to that debacle. Obviously, we didn't default. And then a lot of people expect the Fed, like maybe they'll hike a little bit more. Or a lot of people are pricing in a pause at next June FOMC meeting. But they're certainly close, right? I mean, probably 90% of the Fed's rate hikes are behind us. Now, there is a lag to those, but right now the market doesn't really care about that. And if they hear something like the Fed's going to pause at June, I think that could be another, tailwind for risk assets and equities. And then people are just really bearish. There's just calls of, a recession everywhere. And I think a lot of people are paralyzed from the last year. I mean, it was a lot of wealth destruction occurred where bonds got destroyed, equities fell, obviously Bitcoin fell. And, that can kind of happen in a bear market where it's coming out and nobody believes it, right? That's the beginning of the bullish trend is it climbs a wall of worry. And maybe we're seeing that. Now, for me, I do think that we're potentially up against some recessionary factors coming in later this year. It's hard for me to think that, the Fed can hike rates 500 bips at the fastest pace in history after, almost a decade of low interest rate policy. And we're not going to feel any effects of that. Obviously, we had the banking crisis. We had some failures, but then the Federal Reserve, FDIC, and Treasury kind of patched it all up.
Yep.
But, if we see more of those, it could become really problematic. So I'm kind of like cautiously optimistic right now, but I'm being realistic as well, because I think you have to keep a close eye on the unemployment situation, look at the labor market. If you start to see kind of climbs in that, I think that could kind of really start to be the signal that things are going to start to deteriorate. But right now we're in this kind of la la land of everything's kind of going up and nobody can believe it. Nobody thinks it can go on forever. But again, it's kind of this people are deciding, is this the beginning of a bull market and this is how they all start? Or are we kind of headed towards something later this year? And so those are the kind of differing viewpoints going on in the macro picture today.
Yeah, that's really interesting. I mean, it seems like we've been able to kick the can down the road just because there was so much liquidity injected during the height of the stimulus. And so it takes a while for that to come out of the system and for the lagging effects of these rate hikes to really come into play. So what do you think it's going to take for Bitcoin to experience like a true bull run and a really new adoption cycle? I know before in the past, you've said that there are some untapped, potential investors out there, millennial women. I'm certainly trying to reach them, but there are a lot of people who are not in this space yet. And what is it going to take for that next real run where we could potentially even, flirt with the all-time high that we previously had?
I think there's a lot of things that could benefit Bitcoin to kind of get us up into let's say the six figure, 100K that everyone dreams of. I think one is that if we actually see a return to more accommodative fiscal and monetary policies, obviously that's a big part of Bitcoin's value proposition, is that they're going to have to keep printing, right? I mean, and when you look at the situation, the fiscal situation, it's hard to look at that and not say the Fed's going to have to step in here at some point. And so when that happens, I think Bitcoin is going to be, the fastest horse in the race again. It's a liquidity sponge. So if liquidity gets turned on and gets blasted on, I think Bitcoin's going to benefit heavily from that. I also think it's up to us as an industry to build better products and services to make it easier for people to understand Bitcoin as well as use it. That is going to go a long way towards pumping the price. And so those two things, I mean, it's on us, and then it's on the Federal Reserve and the government to do what they're going to do, and for us to just be there, but build the best life raft that we can possibly build, so people know how to get into it, and then it stays afloat as everybody rushes into it, that we're ready for that adoption when it happens and that increased demand. So that's kind of what we focus on. It was what I focus on in the industry, is just building and just understanding the dynamics and the macro picture of why Bitcoin has a long-term value proposition.
It's time for another quick break to hear these messages from my partners. Next up, I want to share with you about CrowdHealth, which is a Bitcoin alternative to health insurance. Health insurance costs are sky high today, and you send your money every month to a massive corporation, and then you never see that money again, even if you don't need a doctor. But if you do need care, you end up having to pay even more out of pocket, especially if you end up as one of the 20% of claims on average that aren't covered. With CrowdHealth, you pay a small monthly fee that goes into an account that you accrue over time and is yours to use or keep if you ever leave. And you can even convert that money into Bitcoin. CrowdHealth is all about community, and the community crowdfunds everyone's healthcare. So if something happens to you and you need medical care, CrowdHealth negotiates down the medical bill lower than what insurance would be, and then the community helps you cover it. And in turn, you help cover others' needs, which has been so rewarding. I am so glad I switched to this program. And for more information, you can head to joincrowdhealth.com/Natalie and use promo code Natalie for a discount. I am so excited to share that I have joined Orange Pill app as an advisor. If you haven't downloaded this app yet, you are missing out on connecting with Bitcoiners in your area. The Orange Pill app is building the social layer for Bitcoin and helping to create opportunities for in-person connections and community building. You can create a profile and you will see lots of familiar faces there. And then you can search for Bitcoiners or Bitcoin events based on your location. I am geotagged in my home base, St. Louis, and I'm super grateful because the Orange Pill app has helped connect me with Bitcoiners in my new city. So come join us, download the Orange Pill app and head to theorangepillapp.com for more information. All right, back to the show. Well, you sound very positive and bullish, which I love. And I think my listeners and viewers will love. It's funny because I see both sides in terms of the macro view and the analysis lately. I was just listening to Stanley Druckenmiller a couple of weeks ago. My gosh, I felt so bearish. After that, it sounds like we're headed toward the cliff of all cliffs. But of course, behind that is the money printer has to resume, like you said. But that's also scary, right? I mean, the level of printing that will be needed when we're so far in debt and the deficits are growing and the tax receipts are falling. I mean, there are some analysts out there that are predicting, double-digit CPI, and then others counter that and say there's no way because that was the result of supply chains closing and massive fiscal stimulus. And so it's really difficult to navigate this space, especially if you're maybe newer, you're not, totally focused on finance or investing full time. How do you navigate? I mean, what is the best path forward? I'm guessing you're just going to say, right, hold Bitcoin. But in reality, I mean, there's so many conflicting views. Why is that?
Well, I think you brought up Stanley Druckenmiller, and he said, this is the hardest market to navigate or forecast in his entire 40 plus year career. And I think it's because we've seen, unprecedented actions on the behalf of central banks and governments since the COVID pandemic. And it was just absurd how much money they printed.
Yeah.
And it's sloshing around the system.
Yeah.
Yeah. And people have a really hard time understanding what's going on. And we also have something called inflation back into the picture, which hasn't been around since the 1970s. And so a lot of people are confused about how to allocate capital right now. And understandably so. And I think if you are in this situation where you're wondering how to protect yourself, I think it's just, it's kind of like a trope. It's a common trope, but like diversification is really important. And understanding, like, I think like hard assets would do well in an inflationary environment. I think some equities would do well in certain sectors. But I think it's going to be like more active management, and you have to know what you're picking, and you have to actually do the homework when you're picking equities. It can't necessarily just be like, hey, we're going to throw it at everything and it's all going to go up like before. And then obviously Bitcoin's a part of it, but that's one of those hard assets. So that's kind of what I look at. Certain commodities will probably do well in this environment as well. So, those are kind of the things that I look at, that I look at history. And I say, okay, these things could do well, and then try to diversify my risk as much as I can. And that's really all you can ask for, and so it's a challenging environment. It's because we've never been in an environment like this. And so if anybody's being really certain about their forecast or where you should put your money, I think you should really question them, because there's going to be a lot of, you got to be humble in this environment that's so new.
Yeah. Well, and you do see outperformers. Recently, I read the book Psychology of Money, and I was surprised to learn that actually with a lot of these indices and with investing in general, like the Russell 3000, it's only a couple of companies and stocks that outperform by such a degree that you are profitable. And if you invested in the index, and the majority actually fail or significantly underperform. And we're kind of seeing that now with AI outperforming, right? And certain tech stocks outperforming. So do you expect that to continue as well?
Yeah, the measures of stock market breadth are really at historic levels right now, where most of the S&P 500's returns are concentrated in the top 5 tech stocks, and driven by that AI mania that you brought up. Now, it's interesting because I actually looked into this a little bit, And back in 2020, when there was that crash and everything was going up, there was the exact same narratives were going on where people were really worried about the stock market breadth. And they were saying, this is really, there's a lot of weakness underlying here. It's a really grim outlook. It's all kind of concentrated in big tech. Be really cautious. But they were all wrong. Goldman Sachs put out a report and they were wrong. Those stocks are up 73% since that report came out, roughly. And so this is kind of how bull markets start historically, where you can have like more concentration at the top. But I do understand the other side of the argument, because you want to see the rally start to broaden out to the mid caps, to the small caps over time. I imagine it's like you don't want something really top heavy built on this really bad foundation that's full of these companies that aren't doing well, not participating in the market run up. You can kind of see how that would create a fragile market that would be really susceptible to quick declines and drops in the index prices. So there's kind of two ways to look at it. This is kind of what we've seen in the past around these times where we start to see concentration. We haven't seen this level of concentration before. And there's also kind of periods where future or forward S&P returns are correlated to the concentration. So when there's higher levels of concentration, sometimes the forward returns of the S&P 500 are down a little bit. So there's two viewpoints. I see both of them, and I think it's something to keep an eye on over the next couple months to hopefully see some more broadening out into the mid caps and the small caps.
Sam, why do you think some of that money isn't going into Bitcoin? I mean, we see these numbers and these stocks going up, and meanwhile with Bitcoin, it's like a sideways chop.
Yeah, I think Bitcoin kind of fluctuates with its correlations over time. When you look at like the 90-day rolling correlation right now, it's actually more correlated to gold over the last, say, like 6 months or so. And you saw a pretty heavy run up. I mean, Bitcoin was really flying. Yeah. And I think you just see some consolidation right now. And then you have this AI mania, right? Like, I think the narratives around these big tech stocks have really pushed it up. And, it's just Bitcoin has such a different value proposition as a stock, in my opinion. It's driven by its scarcity. It's driven by its network effects. Whereas these stocks, they're stocks. They have earnings, and people do discount cash flow analysis. They're kind of at these nosebleed levels right now, but that's how they kind of value those things. So they just have different value propositions. But I do expect Bitcoin to maybe close that correlation a little bit if we see equities start to run up further from here. I think Bitcoin might get pulled up a little bit with that mania because it's kind of associated with that in some people's minds.
Got it. All right. Well, what else are you watching? I understand that you might be writing a piece on some products and companies that we should be watching in the space, right? What else should we know?
Yeah. So like I said, I'm really interested in just doing kind of industry research and market research about different companies, about what products and services are being built. I've looked into Fedi pretty in-depthly, which is a collaborative custody solution, as well as kind of a federated operating system, kind of gives data back to the individuals, power of their data back to the individuals. It's really excited, kind of incorporated with the Lightning Network, and a different kind of custody solution that's out there. It's kind of in between full self-custody and then third-party custody. It's got this community custody right in the middle that could be really beneficial for people, specifically in like the global South, where they don't have to rely on these like big offshore exchanges like a Binance. They can have their own kind of community custody solutions. I'm looking at things like Amboss, who does really interesting things with a Lightning Network, looking at like Lightning marketplaces, channel marketplaces, and they just put out this liner, which is a Lightning reference rate, which is really interesting. And so I look at like AnchorWatch. AnchorWatch is a really interesting company that's just started. They look at Bitcoin insurance using mini scripts. So there's really interesting key schemes that you can make with mini scripts where you can have a certain key be like a master key of a 2 of 3. So if you're a safe, right, you have one key that can kind of overpower the others. And there's really interesting dynamics or like kind of schemes that you can make with that, specifically around institutional custody for these like institutions where they need, like, if Fidelity is going to be a qualified custodian, like you need to show that you can have actual control of the funds in a certain way in these like multi-sig schemes. And then for insurance purposes, which is a really big problem in Bitcoin, with like, how do you insure Bitcoin held in custody? Right now, insurance in Bitcoin is really under collateralized. So there's, you can get insurance at, say, a custodian, but it'll only be like 250 million, but they manage billions of dollars. So if something happened to them, there's no way that insurance can cover all the assets under management. And so with products like AnchorWatch, perhaps this is a better way to do insurance. And it's a way that you can actually utilize the programmable digital nature of Bitcoin and create new ways to do insurance. So you don't have to do it like the old ways. You don't have to trust like a custodian to hold gold bars in a vault with Bitcoin. There's no reason to do that. But that's kind of what they do now, is like, okay, Bitcoin's held in a vault, like literally a vault, and we're going to put insurance on that. So they treat it like gold, but it's not gold, right? It's digital programmable money. And there's interesting things that we can do with it that's not possible with gold. And that's what AnchorWatch is doing. So those are like just three of the things that I'm looking at. But I do a lot of research. I'll actually be posting a piece looking into some of those companies in the coming weeks. So keep an eye out for that. But yeah, really interested about what's being built in this bear market. It's what makes me bullish more than the price, more than anything.
No, it's super fascinating. I look forward to reading that. I had the chance to meet Rob, who started AnchorWatch in Miami. So hopefully I'll have him on the show as well. Sam, thank you so much. Really appreciate it. I hope you all get to check out Sam Callahan's work. His Twitter handle, it's at Sam Calla, right? People think your last name's Calla sometimes. It's Callahan, but it's shortened for the handle. And then your newsletter, your work with Swan, you got to be on Swan Private, people. So I hope everyone joins and buys their Bitcoin from a Bitcoin only company, right? Thanks so much, Sam.
Thanks for having me, Natalie. And for everyone listening, just get your Bitcoin off of these exchanges. Take self-custody today. That's my parting message. But thanks for having me on, Natalie. Appreciate it.
Thank you so much for watching the video version of this show. I really want to hear from you. If you have suggestions or guest recommendations, you can email me at natalie@talkingbitcoin.com. Please subscribe if you want more content, and I'll see you next time.